Welcome to the FI Investors Podcast, helping you achieve financial independence through real estate investing, one episode at a time. We talk about personal finance, mindset, and real estate investing. Whether you're a rookie or looking to scale your portfolio, we're here to provide you with the tactics and actionable steps to achieve your goals. Here are your hosts, Diego Corzo and Ward Mahoney.
What is up, Ward? How are you doing today?
What's up, Diego, man? Always stoked to have another FFF Financially Free Friday here with you. Excited for our conversation.
Yes, same here. So today, one of the things that we're going to be covering is, since it is Financial Freedom Fridays, is going to be on becoming a 100%er, or what is your financial freedom number? That's going to be the topic for today. So, Ward, why do you think that having the clarity of having that number is so important?
Yeah, so that number is so important because it will tell you which strategy you want to use to hit, financial independence.
Mm-hmm.
Really, right? So what you have to do is you have to identify your financially independent number, your FI number. And basically what that is your living expenses, just your monthly living expenses. And what you're going to do is you're going to take that number and you're going to think 5 years in the future, and you're going to say, what are my living expenses, including inflation, whatever it may be. Maybe you're going to have another kid. What will your living expenses look like in 5 years? Right. And really coming down to that number will then drive which markets, strategies, and asset classes you should be investing in.
Exactly. Yes, because one of the things that when I'm talking to people about financial freedom, they usually think that they need millions of dollars in the bank. It's like, I cannot retire right now, or I cannot quit my job. I need millions of dollars. And I'm like, no, that is not true. What you need to understand is, what is that financial freedom number that basically covers your monthly expenses and then some if you want, or making sure that you budget for your fixed expenses, but also maybe some travel, some fun, whatever that is of things that you value, to then be able to work backwards, right? But giving yourself that plan and that clarity. So usually, just to start on that formula, to become a 100%er, and this is something that I learned from the guys in GoBundance, is basically you divide what your monthly expenses are, right? Like, to figure out where you are today, you divide what your monthly expenses, what your monthly income is divided by your monthly expenses, right? So let's say that your monthly expenses are $5,000 a month, and you have $500 a month coming in passive income. If you divide 500 divided by 5,000, that is 1/10, which technically means that you're a 10%er. Mm-hmm. So the idea here is that you may not get to 100%er, let's say in year one, right? But just what you were talking about on the strategy part is is having the awareness that maybe in 1 year you get to 10%er, in year two you get to 25, year three maybe 40%er, year four 80, and year five 100%er, right? Maybe you may not do as much in the first 2 years, but then you get momentum. Maybe you're doing bigger deals and you don't get that big payoff until a couple of years on the road. Mm-hmm. And then that's when you finally hit it. But I do know, Ward, that you have these conversations with FI investors, rookies, with the people that are coming into the mastermind, right? Sure. How do you break it down? Walk us a little bit on how you get them to come to their 100%er number, mm-hmm. and then we'll talk a little bit about the strategies to invest for that.
Yeah, absolutely. So the first thing that we do is we sit down, and everyone that comes into Rookie gets a one-on-one. We break exactly what their 5-year real estate investing plan should be to hit their goals, right? Mm-hmm. And really, anyone that comes to the program, their primary goal is to achieve financial independence, right? What does that mean? Like we just said, it's when your passive income is equal to or greater than your living expenses, right? So in order to find that FI number and to figure out that 5-year goal, we identify that FI number, and we go really, really deep in looking at people's expenses, right? Mm-hmm. And then we also try to be more gracious and add, over a 5-year period, we'll add, maybe $2,000 to $3,000 minimum to whatever their goal may be. But once we've identified their FI number, which is the most important part, what we do is we then look at just really brief strategy, or I should say high-level strategy. What kind of portfolio do you want creating cash flow, hitting that cash flow that you're looking for? If you're looking at a long-term rental, you can expect to get anywhere between $100 and $150 a door per month in cash flow. If you do an Airbnb, you can get $400, $500, $600. It totally depends on the market, the deal, etc. But it just shows, right? If you're looking, if your FI number is $4,000 a month and you get $100 cash flow per unit, you need 40 units. However, you could probably do that in, say, 5 to 6 different Airbnbs. So we really take that FI number, we break down where they're currently at financially, create goals around that, and then what we do is we look at people's individual interests, whether it's an Airbnb or long-term rentals, and then we craft a plan, a 5-year plan to help them hit that FI number using that strategy that we looked into.
Exactly. No, yeah, that's really good too, because you get to understand also how active they want to be, right? Because there might be times that they can look at a property and be like, okay, this is great for a long-term investment. Long-term, let's say for easy math, it gets you $300 passive income.
Yep.
Long-term. But then maybe if you see this in short-term, like a short-term rental, it might get you, right, like that, like $1,200 a month or something. Maybe you can even do midterm rental or the co-living side, right, where you're renting out each room as an example, and maybe you're house hacking first, or maybe you're just straight up doing like the co-living model. But then you get to see what that asset can give you and how active you want to be.
Right.
Of course, the more active you are with certain strategies, the more cash flow you would get. But you have to understand that, of course, you're going to be, it's not as passive, right? As like what Instagram says that passive income is, right? At the end of the day, exactly. Yeah, it's never that passive. But it's more understanding how much more effort you want to put in,
right?
Because it's much easier to even put a long-term tenant there, put a property manager, and forget about it, right? But the idea here is like, what I do like about that is you give them the opportunity to understand how active they want to be based on the strategy, but it's based off the one asset, which is really good to have different potential exit strategies.
Right.
But of course, as always, one thing that we always teach is what will this property look like in the long term as the base, and what is, like, if you optimize this property, what would it look like in the future, right? So yeah.
I love that. Yeah. And it's funny, right? When we do a lot of these meetings and stuff, what we see is people come in and they come in with goals. Oh, I want to have 10 doors, right? 15 doors, 20 doors. And one of the things that I really enjoy by going through this exercise is not just breaking down the different strategies and understanding which is, going to be more active versus more passive, but really breaking it down and seeing the clarity that everyone has as soon as they see that light bulb moment, right? That's definitely one of my most exciting, parts of having these one-on-ones. And with that clarity, it provides a lot of opportunity to move forward more quickly because you have a lot more motivation.
Yeah, and one of the things too that I do like about doing those one-on-ones is that as you're talking to somebody, and this goes for the audience too, anybody that's looking to get to their FI number, is don't underestimate, right? Like the equity or the appreciation is a cherry on the top. But don't underestimate that too, because you can use, let's say that you get a property that you can add value to it, right? There's various different strategies where you can just get a new build and don't have to worry about any capex, any type of expenses, or you can go more let me do value add so that then I can get a line of credit from this property. Or even if you don't, but then the market goes up, you can use lines of credit or do cash out refinance, get your money out and deploy it again. Right. So it's really important as we're looking at the FI number is to don't get discouraged, because you might say, oh, well, I'm not making that much money, so I can't save as much. But there's different ways that you can do it too, that you can shrink that gap. And that is through partnerships. That is through getting those lines of credit of borrowing from the equity that you have already built in your previous properties. That can be also strategizing on leveraging your 401k.
Yep.
Right? Leveraging those types of investments that you can borrow against it and be able to buy those assets. Yeah, that's really important, and I bet you that for you it's very fulfilling too, being able to ask them the right questions, and then they're like, "Oh my gosh, it's totally possible."
Yeah, that's exactly what happens, and that's it. Definitely is one of my favorite things that we do. 100%.
Yeah. So in getting through the, like, once you have your 100%er number, right? And your financial freedom number, what are the strategies? I know we talked a little bit, but what do you make them go through as they create their roadmap?
Yeah. So basically what we do, right? So as soon as we figure out that FI number, our next step is really identifying a market and identifying a strategy that aligns with their long-term goals, right? So, one of the first things that I see is that a lot of rookies that come in, anyone that has not done their first deal, they have an idea of the deal that they want to do, but they aren't, they haven't refined their underwriting ability. So as far as identifying an opportunity, it's not there yet, right? Mm-hmm. But they have this, really good idea. I want to own a triplex in like 3 weeks. I'm like, okay, cool. What is your buy box? And they may say, oh, I don't know. I need to close on a triplex, right? So really what we do is we break that down. Okay, with this triplex, what is your cash on cash return? How much money is invested? Are you going low money down, FHA, house hack, or are you going out of state, 20% down? And we'll look at all the numbers. And then from there, going market specific and then really situation specific, then what we'll do is we'll look how to build a team. And we'll personally give them any contacts or anything that we have, any resources in those markets. We always like to start out with an investor-friendly realtor. We have lenders who lend in all 50 states, and we try to connect them there as well.
Yes.
After that, we set up process goals to make sure that people are getting comfortable with analyzing deals, and then we'll periodically check in on the calls and whatnot to make sure people are staying to make sure people are being held accountable.
Yes. No, but that's really cool because it does give them the clarity of what number do they need to achieve to get that FI number, right? To achieve that level of financial independence that they want. And then it gives them the roadmap. And this goes for anybody, right? Having that clarity and being able to know what actionable steps they need to take to be able to get there. It gives them also the confidence that they know what they need to do.
Yeah.
Now it's just a matter of them, of like giving that accountability, right? To get them to do it and to have a strong enough why that gets them to get over their excuses to be able to make it happen.
Exactly. Yeah, that's it. I mean, one thing that I've seen too now coaching the rookie program for almost 6 months now is that with accountability and a really tight community and some success within that community, it blows me away at how fast people are able to learn and how quickly people are able to move. It's really, really exciting to see.
Yeah, so it sounds like one of the common denominators of people that are wanting to achieve financial independence, it sounds like surrounding yourself with other people that are wanting to achieve financial independence, it gets them to take action faster.
Yeah, absolutely. Absolutely. I would say to push that, one step further, if if your goal is to really buy your first house hack or just take that first step to financial independence, and if you look at the average of the 5 people you spend the most time with, and that's not being brought up in conversation, one of the first things I would do is I would try to find a way to start having those conversations on a normal basis.
Dude, that is really good. That's really good because then for everybody that's in the audience, right, ask yourself, in the last 6 months, from January to June, how many conversations did I have about financial independence, about real estate investment with my peer group or with my friends?
Yeah.
And if they are not enough conversations to help you pull the trigger to take action or to move you forward, then you need a better circle of friends. You need not a better circle, but you need people that have the same purpose as you from that perspective.
You have terrible friends.
You have terrible. Yeah, no. You have friends. You need to have friends that are pushing you, that have the same interest as you,
right?
Because it's what you want, right?
100%.
Because if not, when you share those, right, because you might be like, oh, I don't feel comfortable sharing these goals with my friends because they might think that, oh, all I want is money, and then we can take it to another conversation, right? But the idea here is that ask yourself, how many conversations have you had about financial independence with your peers? Because if not, you need a new set of peers that will help you, that you are the average of the 5 people you surround yourself with, and that average can be, it's average for all of your friends to be financially independent. Like 100%. How cool is that, right? Yeah. Where we're like, hey, yeah, you want to do this? Cool, let's go, right? Mm-hmm. So at the end of the day, it becomes that, but it all starts with clarity on your FI number.
Absolutely.
Yeah. And one last thing, I know like on the roadmap, right? Because I like giving like extra hacks, right? One of the key things too that I like of things that people may not think about is they might think, oh, I need my primary, or I'm going to invest out of state, like long-term or Airbnb or whatever. But this is just an extra umph on this. Don't forget the power of the second home, because you can get your own property in where you live, and then 50 or 100 miles away, minimum, you can get a second home, and you can qualify for various second homes throughout your life. So just make sure that you're applying that extra hack too in the different markets that you're doing, because a second home is only 10% down. Yeah. Right? So owner occupant, let's say it's a house hack or something like that, is like 0 to 5% down. Second home, 10% down. And long-term investment, of course, 20% or 25% down.
Right. Okay, so one of the things that I see with rookies specifically is they lock in on one strategy. And one of the things that I realize now more as a coach is that there's a lot of options out there, and there's a lot of ways to make deals happen, right? Mm-hmm. But don't limit yourself to one strategy, one financing option. There's a lot of ways to get that deal done, especially if it's your first one. Last thing I'll say too with rookies is a lot of people that I notice, they initially want to hit that home run, but really what's the best first step is one that is a single, one that you're confident you can go into and perform at, and that's going to make all the difference. Your first deal is really training grounds for the second, third, and fourth.
Exactly. I love that, because it's your first deal. Sometimes people only want to hit that home run, and it gets them stuck in analysis paralysis. But if they're okay with getting to first base, then that's like what you said, the training grounds of getting their network correct, getting to analyze deals, having those conversations like with the property managers, their investor-friendly realtor, their lender, knowing the loan programs, understanding, like talking to the contractors, basically setting the team up. Yep. So that then later you might be able to analyze deals and be like, oh crap, this is actually a home run if I do it this way or whatnot. But you're not going to get to that unless you get to those first base hits.
Right. It's all about those first base hits. And the way that you can make those first base hits is by identifying opportunity. And the only way that you can identify opportunity is by understanding what's in your toolbox. You do that through building your team, learning how to run numbers across multiple strategies, etc.
Yeah, no, that's good. And the last thing that I would say here is that when you're creating your FI number, it's really good to want financial independence. It's really good to have that, understand maybe you want that $10,000 a month, right, as your FI number. But it's important to not only define that, but also define what is your why, of why you want that financial freedom, because the road to financial freedom is not easy. There's going to be a lot of hurdles, a lot of haters, a lot of people that are going to be like, oh, you're crazy. Why will you do that? Why would you invest out of state? Are you even going to go see the property or whatnot, right? So a lot of naysayers are going to come, and they might pull you down. But if you have a strong enough why, then whenever those obstacles happen, you'll be like, you know what? I'm doing this. It's okay. This is just a hurdle, but my why is my family. My why is that trip that I want to get to, I don't know, Italy, whatever. Yeah. And like as a goal, right? But that why is the thing that's going to push you through those hard times. And I feel like if you combine that level of financial independence number with the right actions, with a strong enough why, you're unstoppable and you will achieve it.
I love it, man.
Awesome. Well, Ward, thank you very much for another Financial Freedom Fridays. This is super exciting, and I hope that the audience definitely takes action on all of this. If they haven't figured out what their FI number is, one of the things that we do have is the net worth calculator. We have the 100%er also like calculator. So they can go to the FIinvestors.com to check it out. And we also have an ebook now for anybody that wants to download the 6 steps to achieving financial independence. They can go to the FIinvestors.com/ebook and are able to download it.
I love it. Or shoot us an email at info@thefinvestors.com. We'll shoot you over a copy. Thank you so much, Diego. Another really fun Financially Free Fridays. We'll see you next week.
Peace out.
Peace.
Thank you for listening to the FI Investors Podcast. Make sure you subscribe so you don't miss any future episodes. And share this with a fellow real estate investor who you think would find value in what we do. Until next time.